Good morning, guys. It is Tuesday, February 2nd. Now, another month. Man, so it's blowing by really, really, really quick. As you all probably already know, I'm even saying that's cliche as crap and all that kind of stuff. But today, I think I'm going to expound on a few things here. Do a little bit of preaching, if you will. And I even got my clergy badge out. And this is my badge, my clergy badge. So I'm going to go ahead and put that sucker on because we're going to get a little bit of real estate, finance, redneck reverend action going on here. I'm going to do a little bit of sermon on a couple things. Now, this is not me trying to be offensive to anybody. We got to get serious about a couple things here. One, and if you've seen this book, Quit Jerking Off, that's the background right behind me. There's a peak up there. This is me in my reverend suit, in my clergy suit, doing the preaching in this particular book on specific things. So if you haven't seen it yet, haven't read it, go to Amazon right now, search QJO Initiative, Aaron Chapman, QJO as in Quit Jerking Off, Initiative, Aaron Chapman, and then it'll pull up. There's 4 books. Get just that one if you want, right? And you see exactly what I'm talking about with that. It's not entirely about, the connotation that's being referenced, even though that is referenced in there, also has a lot to do with just wasting time. Not understanding what you're doing is a big, big, big issue right now is what I'm seeing. So let's get into something here that I'm getting asked a lot. All right. I'm getting asked a lot about, because I brought up the LLCs in the last few recordings, and there is some folks that ask me, well, why is it we can't get a loan for an LLC with a Fannie Freddie kind of loan? So what I'm going to do to answer that question, now this is going to be several parts, and a lot of it's Aaron Chapman's opinion, right? Because I've done a little bit of the research, some of it I've forgotten. We dug into this in the past, but I'm going to give you some memory stuff here to go off of here. So let's just talk about the market for a quick second, because this goes right into it. So we're seeing where the Fannie Mae 3.0 is still continuing to do very, very, very well, money flowing into it, right? So these are, again, the candlesticks going all the way backwards to some things we talked about in the past. These represent a day's trading. So I'm going to zoom in even more. So let's go here. The bottom of this green bar, this candlestick represents where it started, right? This represents where it ended, the very top of that green bar. So since it's green, it ended at a higher position. This represents as high as it traded, and this represents as low as it traded. So we see these support lines here. We got resistance up there where it held the ceiling, blocked it from rising any higher. We got support here, support here. Both of these support lines, based upon trades and what they're in, some certain metrics that Wall Street's looking at, it shows we traded back to the top of support, right? So here we traded within support, below resistance. We also have the trend lines, 10-day moving average. We have the 200-day moving average. We have the 30-day moving average. We have the 100-day moving average. So what they do is they take the average over those days and they chart the trend line, right? And we're above these things. That's a good technical position to be in. And you can see where we traded since then. Now let's take a look at this red one. This is where it traded where it opened in the higher position, closed in the lower position. That's why it's red. It closed lower. Therefore, money left the market. More money left the market than what went in that day. And as you can see, where the trade swung all day long. Now, this is where we are today. We're in a very, very solid position. Rates will continue to stay in a very, very good spot for the real estate investors. Now, why do I get into this? And with the whole clergy thing and the preaching thing and all that kind of stuff. There's a finite amount of capital going in there. It's billions, right? It's billions every single day going in there, but billions is coming out, right? So when you're looking at these trading in and out like that, there's people trading out of it. There's also money being taken for loans. It doesn't just stay there, right? So when we're talking about this finite amount of capital being made available, and this finite amount of capital that goes in and out all the time, and was designed, these particular 30-year fixed loans were designed for home ownership. They're designed for people to be able to buy homes to live in, not for businesses. We are blessed. This is a blessing. Get this. This is a blessing that you as an investor can finance 10 properties, and all 10 of them can be investments that can make you money, that you can finance your business for 30 years at a rate that's lower than the rate of inflation. When you go look at the real rate of inflation, not the CPI or the PCE, which we talked about a lot. You're literally getting the money for free. So If you do it for LLCs, if they start lending to LLCs, because everybody has the argument, it's I'm just trying to protect myself. This is what my attorney says I should have to keep myself from getting sued. That's the risk you take. You do have ways that you can set that up after the fact and all that stuff. We can set up appointments to talk about that. But to lend to an LLC, think about this. How many corporations out there have figured out ways to take advantage of stuff, right? They have the financial wherewithal, they got the attorneys, they got the ability to set things up where they can take advantage of opportunity. That's what they're built for, right? In fact, if we want to get into the whole GameStop stuff we've been talking about lately and getting into hedge funds, that right there is just exposes a lot of things. Now, I'm not going to get into details about that. That's for you to analyze and look at yourself, but exposes a lot of stuff in the background. Do we not think that if the conventional lending was made available to companies, to entities, to LLCs, no matter what it is, that money would disappear overnight? It's a finite amount of capital. You think $4 to $5 billion in a day is anything to the corporate structure out there, the amount of capital that's going on out there? Think about that for a second, what you're asking them to do. The second they do that, it's gone. You're not going to have it. We're not going to have 30-year fixed loans anymore. We need to be protective of this. The way to be protective of it, follow the rules. Let's talk about the rules. Let's talk about the guidelines of lending. A lot of people get frustrated with what gets asked of them to provide. A lot of people get frustrated with the process. There's some folks out there that just charge into it because it sounds like a really good thing for the end result. They think about the end result and they think about that so much they just dive into it and not understand what they're getting into. And then they get frustrated with everybody involved. Everybody, the builder, the seller, the real estate, the agents, the whoever might be representing them on that agent side of things, whether it be a whole aggregator or whatever, the title company, the lender, because it's everybody else's responsibility to make sure that they understand when they should have just taken the time to understand up front. This question of it's not fair, or the question or the statement of you guys need to do this, you need to do that, guys, there's rules we got to live by. We're going to do the best by our client we possibly can. The title companies will do the best by their client they possibly can. People are still people. They're going to do what they can. You need to take responsibility for yourself and understand these things before you get into it. Am I targeting a specific person? No. I'm trying to tell everybody, no matter what it is you do, whether it be real estate investing, whether it be stocks, whether it be crypto, whether it be precious metals or commodities or Forex, I don't care. Understand it before you step into it. Take personal responsibility for yourself. And if you fail, if you lose, if something happens you don't get, if you're upset with the outcome, look inward at where that is. Because I'm going to be looking inward for me when if something goes wrong with one of my clients. I'm going to figure out, what can I do better? You need to be looking inward to you to see what you can do better. You need to learn from the mistake. You need to learn from that and put systems in place for your future. Every beating we take is for our benefit, period. And especially if it's self-imposed beating. That's where you get to learn more, because if it's a beating from the externals you had no control over, you're going to have to learn where that particular issue lied and how to avoid it and walk around it. Sometimes it's hard to figure that out, but if it's something you decided on, you failed on, you didn't understand, you didn't take the time, that's where you can change it. You have complete control of yourself. You're the one that decides what you do. You're the one that decides what you learn. You're the one that decides how you go about your business, and you're the one that decides what decision you actually make or don't make. And if you can embrace that, if you can wrap your head around that, and if you can quit jerking off and move forward with your life for a purpose and do things that are of value for not just you, but for others, you'd be amazed at the outcome. Seriously, this is not me chastising you. This is me sharing with you what I found has just been some of the greatest things I've ever experienced in my life, was the beatings that I gave myself not knowing. Now I know, and I know a lot more beatings are coming. There's a lot more on stuff. In fact, who knows? Maybe this video itself will throw me a beating. I might get all the dislikes in the world as a result of this, and that's going to happen potentially. Again, I'm not here to offend. I'm here to inform. And if you're getting offended, I can't control you. You got to control you. But I just hope that I do this because I care about you. I want you to be successful. I want you to take time, pause, learn, and don't act on fear. People are jumping into this stuff out of fear. The rates won't last long enough, or their inventory is going to go away, and they jump into things they don't understand that hurts them. Don't hurt yourself anymore. Let us help you. Understand what you're doing. Let us help and explain it well in advance. Get pre-qualified before you sign a contract, period. I'm going to jump off my soapbox now. Appreciate you guys. I'll talk to you again on Friday.